Well, markets managed to contain their excitement about the government forecast that inflation will be brought under control by the end of this year, 12 months ahead of when the Reserve Bank thinks. The pricing of cash rate futures stayed the same, which would be a combination of we'll believe it when we see what's in the budget and the Treasury doesn't set interest rates, the Reserve Bank does, so its opinion is the one that matters. Anyway, global interest rates are well off their 5,000-year low of zero hit during the pandemic and before that the GFC and the Great Depression of the 1930s. It actually looks like rates are a bit above the 2,000-year average if we exclude the craziness of interest rates in Mesopotamia around 3000 BC, which were even higher then than in Australia in 1989. Back to the future. And NAB published its monthly business survey today, and both business conditions and confidence were more or less unchanged. But what struck me about this graph of them is the unusually big gap between them. It means businesses are much less inclined than usual to think the current pretty good trading conditions will last. The share market closed steady, ANZ went ex-dividend, and energy stocks were not bucked up by the government's future gas strategy because the oil price fell 2% over the weekend. Also, copper went above $10,000 US a tonne for the first time in 2 years. Not much happened on global share markets after a flattish session in New York on Friday, and the Australian dollar stayed at 66 US cents. And that's finance.